In this class we want to look at financial and non-financial incentives that are offered to employees to engage them in work or to motivate them in work. The sales team contribute to an organization's success and goal accomplishment. The sales team are responsible for making sales. The sales team are the ones who are responsible for generating the revenue for the business. So we would expect the sales team to have a high degree of motivation and engagement at work. But what we need to see is the same sort of engagement and the same sort of enthusiasm cut right across the organization, irrespective of the task being performed. Now, in order for that to happen, there should be financial and non-financial incentives offered to employees to encourage that type of participation, that sort of enthusiasm that's required to bring about successful working practices, greater productivity and sustainability into the future. The main purpose of reward systems for an organization is to retain and motivate the sales force, which increases productivity. That's looking at it just from the sales perspective, but as I said earlier, that cuts across all of the organization. It could be someone working in accounts or someone working in engineering or in maintenance. The same type of enthusiasm and the same type of engagement should be seen throughout the organization, irrespective of the particular functions that are undertaken. And again, as I said earlier, this may be a function of the financial and non-financial incentives that the company offers. Reward schemes are developed as an initiative to maintain or increase employee motivation and commitment. So reward schemes are in place to try and encourage enthusiasm, to encourage motivation. It's not simply a question of paying the workers for the job done. It may be a question of designing payment methods that will encourage the workers to be motivated, to engage the tasks enthusiastically and to work hard and apply themselves and give some commitment, rather than just simply working out the task in order to get paid at the end of the month or at the end of the week. So it's trying to design payment systems in a way that encourages motivation. Now, as I said, there can be financial or non-financial. Companies may encourage the engagement of workers, the enthusiasm of workers, the motivation of workers by financial means, or it could be non-financial. It could be simply recognizing them and talking to them and encouraging them. So it's not necessarily all money here. It could be non-financial. Financial rewards include salaries and bonuses, commission, profit sharing. So there are a variety of ways to move in order to encourage people to engage with their work. So given a salary may not be very successful because the employees may simply think they get paid at the end of the month anyway, so why work too hard? Giving bonus may encourage more effort, and given commission and profit sharing and so on. So it's trying to find a financial means of payment which will get the job done, but will also get it done efficiently with high levels of productivity and high levels of motivation. Non-financial rewards include the aim to satisfy employees' psychological needs, job satisfaction, recognition, career opportunities, trust, responsibility, skill development opportunities. So non-financial rewards are important as well, trying to ensure that the employees get something back from working, from the task. The task is not boring, it's not repetitive, continuously repetitive. It's varied. It engages them. They have to think about it, and they're interested in solving the problem and working on the task and working as a member of a team, and they're engaged. They are motivated. So that does not involve financial payment. It's job design. Now, financial reward schemes. Let's look at these for a start. Time rates. This is the most common method of payment in the UK. An employee is paid for the number of hours worked in an organisation. So if the employee works 40 hours a week, they get paid for 40 hours. They know what their hourly rate is, and they multiply it by 40, and that's what they get at the end of the week. It's a very common method of payment. So it refers to the number of hours worked, and this could be weekly or could be monthly. The reward experience rather than performance concerns the value of the task, not employees' skills and capabilities that they bring to the job. So sometimes workers, when they're in a particular role for a certain number of years, they are rewarded by extra payments. They get so much extra per hour because they have more experience. In fact, they may not be very good at the task. This is simply there for a number of years and have been promoted accordingly. So they've been promoted on the basis of the number of years worked rather than their productivity, which doesn't make a lot of sense. So time rates have got problems. Employees are bound by weekly contracted hours, which they must fulfill to receive their pay. So if the contracted hours are, say, 37 hours a week, the employees must work 37 hours a week, otherwise they won't get paid. That's the contract. So if they work 37, they'll get 37 times their hourly rate, depending on what their hourly rate is and what's been agreed. Overtime, if they work more than 37 hours, overtime may be paid, and this may be paid outside of the contracted hours. There may be an extra incentive to work extra hours rather than work 37, work 45, let's say. Well, the extra hours will be paid at a higher rate. Generally speaking, that's the case. Overtime is not relevant for management and senior positions. Generally speaking, management and senior positions don't get paid overtime rates. If they have to work extra hours, they simply work extra hours. They don't get paid extra for it. So generally speaking, management don't get overtime rates. Now, the advantages of time rates. Well, all the employees working at the same job will get the same amount. So it's easy. It's easy to administer. Simply look at the number of employees doing a particular type of work, and they all get the same amount. It's easier for organizations to administer. It's very predictable. The labor costs are easily worked out, so it's a very straightforward method. The employees may like it because it gives some stability. It's reliable. The employees can work it out as well. They know if they do their 37 hours a week or their 40 hours a week, they know what they're going to get. There's almost certainty about the whole process, and the employees are quite happy with that. It's good for general roles, general tasks where this is applicable. Certain tasks need to be completed, someone needs to do it, they agree an hourly rate and they work a certain number of hours, and that's it done. So it's very straightforward. Now, the disadvantages. Well, employees do not have any incentive to increase productivity. They're paid despite the level of output. So workers don't have to be that efficient. They simply look like they're working, but they may not be working as hard as they could. So they're just doing the job. They're not motivated to work harder. They're going to get paid anyway. So why work harder? Now, payment by results is the alternative. Payment by results was introduced to help increase employee motivation and productivity. The concept of payment by results, the employees are paid by the amount of output, and the level of reward depends on production. So the more they produce, the more they get. So if they go to work and don't work hard, they won't get as much. So given that they've gone to the trouble of going to work, they may as well work hard and get more. So it encourages greater productivity. For example, an employee is paid, say, £1 per unit. The employee produces 500 units. The employee will be paid £500. So it's very straightforward. The employee knows if they produce more, they will get paid more. So there's more incentive for them to apply themselves. It's entirely dependent on the employee and the amount he or she produces. So it's a payment by result. Now the advantages. So the employees are motivated to work extra hard in return for more income. The cost advantages, wages, are related to the level of output. So costs are linked to output. The more that's produced, the more the company will pay the workers, because the workers have worked hard to produce it. They'll produce them the agreed rate per unit produced. Now the disadvantages. Well, some organizations output may not be easy to calculate. For example, an accountant working out some financial accounts for companies. Some companies may be complicated or complex, or there may be information missing from the accounts which have to be found and sorted out, and so all accounts are not the same. Now, paying an accountant for the number of accounts successfully produced does not make sense, because the accountant may have to do extra work someplace, and some accounts may be very straightforward and very clear, others may be very complicated. Lawyers, or solicitors as they're called in the UK, not all legal cases are the same, so you can't say that all legal cases should be paid the same amount. Some are more complex than others. So payment by results is difficult because the output may not be easily calculated. Health and safety needs to be may be neglected, I should say, in order to increase productivity. Well, that's not something we live with easily. We want health and safety. We want workers to be safe in employment. We want them to have good health, to breathe clean air and have proper rests and water and so on. But that goes against productivity, because now they're not producing. When they're resting, they're not producing. So payment by results has got lots of problems. It's not as straightforward as we think. Health and safety is important at work. Workers don't go to work to be hurt or to be injured. Workers go to work to earn a living, and therefore their health should be taken into account. And that means perhaps job designed in a particular way to foster good, safe working practices. But that's not necessarily conducive to high levels of productivity. High levels of productivity may mean cutting corners. So we have a tension here. In fact, most people would say there is no tension. Health and safety rules. That is primal. That is something that must be done. But it may be at the cost of productivity. That's the point I'm trying to make. Next, performance-related pay. This method of rewarding employees, they get a pay rise, let's say, or some bonus, depending on their performance. So, again, it's necessary for the employer to know what the productivity of the workers are, what the output is. It needs measurement, and if it needs to be compared with some standard, some norm. And if the workers are now producing more because they're more motivated, then perhaps a performance-related pay may be the way to go. It doesn't apply in all professions or in all areas. Teachers, performance-related pay for teachers does not make a lot of sense. The teachers work because it's a vocation, because they want to work, they want to impart knowledge, they want to help others. So if they have a performance-related pay, it doesn't mean they're going to speak faster or they're going to work longer. There's a limit to what people can do. So performance-related pay may not be applicable in all situations. But in order to apply performance-related pay where it can be applied, as I said earlier, there needs to be some sort of appraisal, and the appraisal needs to be compared against some sort of standard. How many items can a person working at a normal rate produce in an hour? This person is producing more than that, so therefore this person is entitled to performance-related pay. Extra money because this person is going further than expected. Once the employee has achieved the required standard, they are then entitled to the reward. But as I said, it's fraught with difficulties. Knowing exactly what the output is may be a problem. As in the case of the teacher, it's difficult to know what the output is. The output is a class of educated people who will become good citizens of the country and who will contribute to the country. But it's difficult to measure that. So it's difficult to talk about performance-related pay in that case. So the employer has a problem of trying to figure out areas where it is applicable. And it's not always applicable in all professions or in all areas. The type of method is only used when performance cannot be measured in output or sales achieved. Therefore, this is an incentive pay. Sometimes the output can't be measured, but there's a feeling that these people are working hard and they're applying themselves and they seem to be working hard. It could be by simply observation of the workers. Management makes observations and sees what the workers are doing and gets feedback from engineers and technicians and people engaged with the workers in doing particular tasks. And the information coming back suggests that the workers are working very hard and applying themselves diligently to their work. So they will be given a performance-related pay, even though the output couldn't be measured. But it is very difficult. Back to the teacher example I mentioned earlier, to try and gauge how difficult it is. The process includes reviewing individual performance on a yearly basis, perhaps having an individual performance review or some sort of appraisal at the end of the year to see what the individual feels and what they've achieved in the year and what they're setting as themselves as targets for the coming year. So agreeing a set of targets and objectives, this is known as performance appraisal, to see if the targets they're setting are realistic, if they can achieve it, and if they do achieve it, perhaps they're entitled to performance-related pay because it was agreed at the meeting. Perhaps the line manager and the line operator had a meeting and talked about what was required and what was been undertaken, and could the person increase output if they worked in a certain way, and if they did and output was increased, perhaps they're entitled to performance-related pay. So employees could receive performance-related pay based on an appraisal, based on some sort of interview with the management. Possible. Now, the rewards can include cash bonuses, salary increases, or benefits. Many companies prefer cash bonuses because they are not then committing themselves to paying a higher salary in the subsequent years. So bonuses can be looked at every year and can be varied every year. So by and large, many companies will opt for the cash bonus as opposed to a salary increase. Now, the advantages, well, it may be considered as a fair approach, links pay to performance. Where it can be applied easily, it could be seen to be fair. People work harder, they get more income. So it could be seen as fair. It could help to motivate the staff. It could be goal orientated. So the staff know what they need to achieve. The staff work towards it. If they achieve it, they get higher rewards. Helps the organisation save money as they target rewards on employees who perform. So the organisation encourages the workers who work hard, who apply themselves diligently to achieving the tasks, achieving what they've set out, what they've agreed at their appraisal, and when they've achieved it, then they receive performance-related pay. So the organisation knows who's working hard and what targets they've set and who's achieving. The employees, of course, receive feedback on their performance. The individual performance review or the employee appraisal at the end of the year will enable the organisation to make feedback to the employee about their performance, about what went right, what went wrong, what happened, how was it fixed, how can situations be improved in the future. So there is feedback and there is discussion between the employee and the organisation. There's a huge emphasis based around a results-orientated culture. A results-orientated culture can increase productivity, but it will also increase competitiveness amongst the staff. And that may not foster good working relationships. Team relationships may be damaged because some workers are very competitive and want to show management that they are applying themselves considerably to the tasks, and what they're trying to do is trying to get performance-related pay. But in so doing, it may not foster good working relationships. So there is an issue that needs to be considered as well. Now, the disadvantages. Well, there may be disagreement regarding the methods of performance measurement and employee performance. Employees may see their performance as measured by the number of items successfully produced, but management may see it as the number of items successfully produced, but also the way in which the capital, the machinery perhaps was used, or the amount of energy that was put into the task, or the working relationships that have developed as a consequence of moving to this type of reward system. So there may be disagreements about performance measurement. There can be issues that arise between management and workers. Even though the workers are producing more, management may not be happy about this because perhaps there's more pressure on the stores to provide the raw materials which will be processed into the final product. And the stores are upset about having to carry stock or variations in production, and meanwhile the people who are receiving the performance related pay may be upset if they're not receiving the raw materials to have continuous production. If it's not manufacturing, if it is services, there may be disagreements about what is measured. I gave an example earlier about the accountants. Not all financial transactions are straightforward. Not all sets of accounts are the same. So there may be disagreement about the amount of work required to complete a set of accounts. So simply looking at the number of accounts successfully completed does not give the full picture. The full picture is the amount of effort that went in to complete all of the accounts, given that they are different. So it doesn't encourage teamwork, as I said. The employees work individually. So teamwork is not fostered in this way. And that's why in some organizations it can be quite destructive. Back to teaching again. If performance-related pay is applied in teaching, then individual teachers will want to get the performance-related pay, but they may not want to work with their colleagues. They may not want to participate, or they might want to keep their working practices a secret from their colleagues and not share good practice amongst their colleagues. So it may be counterproductive. It can cause rivalry amongst managers and employees. The managers, perhaps who are not getting performance-related pay, will see employees' salaries or wages rise as a consequence, and may feel that the difference between the two in terms of remuneration has been eroded, and managers may not be happy about this. There's also a consideration as to whether performance-related pay actually motivates employees. Sometimes when a new system is introduced, employees are motivated initially. They may be motivated for the first few weeks or the first couple of months, but after a while they settle back into what they were doing before. They may not be able to sustain a very high concentration of effort. They work hard for a couple of months and then they settle back and think they've got enough. Motivation and performance-related pay, the link between the two is not clear. Profit-related pay is another type of reward incentive which relates to pay and company profits. So in this case, if the company is doing well, the company is making profit, then it may share some of the profits with the employees. In this case, the employees have an incentive to not just work harder and have higher productivity, but also try to look for cost-saving measures within the organization. Because if they save more, they will receive higher bonuses. So the employees receive a bonus when the company is making a profit. However, during bad times, the employees are safeguarded. So they have a fallback position, they have a basic salary, but if the company is doing well, they will receive this extra bonus, this extra profit-related pay. So the employees are motivated to work harder and reap rewards. If the employees work harder, they get performance-related pay and profit-related pay in this case. So it imposes a strong belief in teamwork. If the employees see someone working inefficiently or wasting company resources, that may reduce their profit-related pay. So they have an incentive to try and improve practices right throughout the organization, try to share in the profits of the organization. Companies take on this method because it is seen as a tax-efficient means of paying out bonuses. It's tax-efficient because the money is paid to the employees, and therefore there's no corporation tax to be paid on it. It's paid out as a cost in the business. The employees will pay their own personal rate of tax when they receive it. So that's an advantage. Not a popular method, as most companies, that should be in the plural, companies, IES, prefer incentive schemes based on individual performance rather than group performance. So it's not that popular. Companies try to target individual workers or individual departments and try to improve productivity within the department, and that's best done by having performance-related pay or some sort of bonus pay within that department. Profit-related pay cuts across the whole organization, and it's working out an average right across the organization. So the departments that are working hard may feel that they were carrying departments which were not working so hard. So there may be an issue there. Also, when profits are not predictable in an organization, the method is not very reliable. If profits are highly variable within the organization, then the workers are not sure if they're going to get a profit-related pay rise or not. So they may not be that motivated. They're not sure. So it might vary from one year to the next, and the history is a little up and down. So they think we may get it, we may not. So why work hard? So they may not be that motivated. Some big companies do, however, use this type of reward payment. Now, the advantages, well, employees show more concern for organization success. Employees tend to be more interested in the organization's performance, so they will be looking at cost saving, looking at energy use and layout of the plant, and coming up with recommendations for increased productivity. So the employees should be more engaged, should be more interested in the organization. They know if the company is successful, they will get some reward. It encourages cooperation and teamwork. There's no them and us attitude. And if one department is not working that hard, then other departments may put pressure on it to change its practices and to bring it up to standards. So it's working as a team. The organization is pulling together. So, as I said, pressure from groups, I should say, may raise performance levels. So individuals will be watched by their colleagues to make sure that they're working hard, and one department will watch the next, and so on. And a team effort will emerge, one which is hopefully supportive of each other, but the idea is it will emerge because they wish to receive profit-related pay. Now, the disadvantages, well, it doesn't acknowledge individuals' performance. So the problem here is that the individual is not recognized in this. So one worker may be working extremely hard and the rest not so hard. The one who works extremely hard will get the same profit-related pay as the others. So there may be a disincentive for very high levels of participation, and the rewards may not seem appropriate for some. Some may have put in extra effort but not be rewarded. And relying on others may cause frustration amongst workers. sometimes workers who are working hard and to see other departments not working that hard, and or to see them standing around waiting for a machine to be fixed or whatever, and they become frustrated, they become annoyed. They're working hard and the others seem to be not doing very much, and they become frustrated, they become annoyed with this, and it can lead to issues within the workforce. Poor performance from an employee will affect the whole group performance. So groups will watch each other. They'll watch individuals within the group, and they'll watch other groups. And if an individual is seen as not applying him or herself hard to achieve the required output levels, then there may be issues, HR issues. There may be issues of dissent within the workers and issues of conflict within the workforce towards certain members who are not seen as pulling their weight. Now, skill-based pay is another type of rewards incentive which rewards employees based on their skills and competencies. So in this one, it looks at the workforce and looks at the individual skills of the workforce and their competencies and rewards them accordingly. Reward is increased by the level of skills and knowledge. So, for example, some employees may take on extra training, or they may complete professional qualifications, and they will be rewarded with extra remuneration because of the higher levels of skills that they have achieved and the higher qualifications they've achieved as a consequence. There's a growing need for multi-skilled workforce. More and more companies want people who are flexible within the workplace and can carry out a variety of tasks and carry them out efficiently. So for that reason, people who have got these skills, these multi-skilled workers, they are paid extra sums. Managers use this reward system to encourage employees to take on more skills, which in effect will promote the organization's staffing arrangements. So managers try to encourage the employees to take on more skills and attend more training courses and perhaps go to college in the evening and get extra qualifications and so on. And as a consequence of all of this, they have more skills. They are recognized as being more valuable in the organization, and they will receive a payment, an extra skill-based payment as a consequence. Now, flexible benefit schemes has become a very popular method of rewarding in the UK. Flexible benefits or cafeteria systems are compensation packages which are substituted for pay. These packages comprise of life or accident insurance, pension schemes, medical or dental care, creche facilities for children, holidays, company cars, laptops, social clubs. These are flexible benefit schemes, and the company makes these available to the employees as a reward for the efforts the employees put in. So if they're working hard, then this may be a way of remunerating them. Rather than giving them extra money, they're given these facilities. These packages are adopted to retain employees. Employees have to option to choose which packages suit them best. So many companies make a variety of schemes available, and the employees pick the ones that suit them best, and they have an option to pick the package, and they have this as opposed to extra remuneration. So it's a reward. Now, monetary rewards. Well, money is a complex issue in employee motivation. It is complex. Money is not the only source of motivation, but it does play a vital role. People do go to work for money. They go to work for salaries and income so that they can pay their bills, look after their families, and survive. So money is clearly important, but it's not the only motivator in work. Majority of organisations use money as a sole motivator because it's the easiest one to use. Simply negotiate with the workers how much they want for particular tasks and remunerate them accordingly. So it's easy, it's straightforward. To some extent, money is a motivator as it satisfies employees' basic psychological needs. If you look at Maslow's hierarchy of needs, it is solving the very base of the pyramid. It is supplying the essentials of life: food, shelter, the very basics. So it is a motivator in that sense. People need money to work, so people will work for that. The level of pay may also indicate achievement, status and recognition. People with high salaries are seen as people who have worked hard and have made significant contributions to the business. So they will want to make their presence known, in the sense that they drive a good car, they live in a good house, their children dress well, and they have nice holidays and so on. So it's status, it's recognition. So levels of pay may be seen as a motivator in that sense. Money is a motivator if employees believe that performance leads to better pay. So it's a motivator if the employees believe that. But if they believe that better performance doesn't lead to better pay, why should they perform more? Levels of pay shows achievement and status. As I said earlier, levels of pay shows achievement and status in the sense that if people have worked hard, they have had salary increases as a consequence of their higher productivity and their higher skill levels and their motivation and so on, then they will have received higher salaries, and the higher salaries is symptomatic of what they have achieved. So it's part of their status. Again, I said it earlier. Employees' experience and benefits of pay compared to negative issues, higher tax, for example. So employers experience the benefits of pay. If their salary rises, they will pay more in tax. So there's an onus here for the government to not overdo pay on higher tax, particularly in the middle income ranges. So try to ensure that the people who work hard in the middle take home more of their efforts and more of their rewards. And this means that employees will be motivated to work harder and show off. They'll have higher status, they'll have better cars, as I said earlier, and nicer houses and better holidays and so on. And that's the product of their efforts. Employees must feel that there is a positive balance associated with pay. They must feel that the more they put in, the more they're going to get. They must feel that there is some sort of positive correlation. The more effort they make, the more they're going to receive, and that will motivate them. Then the more they receive, the better their standard of life, and that is an indicator of their status, but also they're able to enjoy better things. So the more they put in, the more they're rewarded, and the more money acts as a motivator. Non-financial incentives. Well, job enrichment. Job enrichment is when employees are given more control and responsibility over their task or project. Often the tasks are more difficult and require more input from the employees. So job enrichment is widening the job. If an employee is doing a very narrow job, just tightening a nut onto a bolt, and doing that endlessly, every day, every minute of every day, it's not very motivating. It detracts almost from the humanity of the person. Now, job enrichment means putting the nut on the bolt, but also doing an extra task or extra tasks, which widens the job, which will create more interest for the worker. And as the job gets bigger and wider, and the worker becomes more engaged with the work, there is more motivation. There's higher application, better application, and more interest in the work. So job enrichment is very important. Extra responsibility and authority is a motivating factor, as the employee will feel a part of the team. So the employee feels important, feels that their work has expanded, and they are more motivated as a consequence. So when employees have a wide remit at work, have fairly big jobs, they feel more important, they feel more involved with the organization. Job enrichment is motivating, as employees have the opportunity to utilize their full potential and offers promotion prospects. So job enrichment enables employees to feel more fulfilled at work. They feel that they are making a contribution. They're not just doing some narrow menial task. They are now doing something meaningful for the organization, and they have got recognition by the organization and perhaps the possibility of promotion. So job enrichment is seen as important. There's also job enlargement. Job enlargement involves increasing workload and adding more tasks to the employee's jobs, similar to what I just said with job enrichment. So job enlargement means making the job bigger. So it's perhaps looking at a particular task and then widening that task. The method is motivating as it prevents boredom and repetition on the job. Employees have the opportunity to develop more skills. So job enlargement will take a particular job, which is perhaps the example I gave earlier, tightening a nut onto a bolt. Now that's very menial and trivial. But job enlargement means that they're tightening the nut onto the bolt, but also moving the bolt onto some other part of the apparatus and doing something else. The job has got bigger. So it's not just job enrichment in terms of changing the whole role of the employee and widening the job tasks. This is job enlargement. It's looking at a particular job and making it bigger, so it becomes more interesting. Although a good method, employees may feel that they are overworked and carry out more tasks while pay remains the same, and that's the problem with this. When the job is enlarged, the workers will expect extra remuneration. They're doing more tasks. Now, in addition to doing one task, they're doing several tasks, all related perhaps, but if their salary hasn't, or their wage has not increased accordingly, they will feel that they're just doing more work for the same money, and that may not be a motivator. Job rotation. Well, in order to increase motivation, employees are sent to different departments to experience the working environment. So workers may be moved around the organization, given different jobs to complete, so they have their work is broken up. They're their working lives are broken up. They're not doing the same tasks day in, day out. They're moving from one job to the next. So job rotation may increase their participation and their motivation. So the employee has an opportunity to experience a range of tasks and operations carried out in the workplace. They have a chance to experience different types of work and different types of tasks. So they may spend some time, for example, working in telesales. Then they may move to customer services, or they may move to door-to-door marketing. Depends on the organisation, depends on the type of work. It just means that they have rotated, they've gone to different tasks within the organisation and have had different experiences as a consequence. So reward plays a vital role in motivating employees to perform to achieve organisational goals. So it's important that the employees are motivated and that the company carefully selects the financial or the non-financial incentives that will help the employees to become more motivated. There are different types of rewards which are only suited for different people depending on personal circumstances and individual motivation. Because individuals are different. We're all not motivated in the same way. Some will be motivated by money, some will be motivated by having an interesting working life, irrespective almost of the salary. They just want an interesting working life. Some will want to have different types of bonus schemes that will try to motivate the workers. Others may want to simply have strong, disciplined management who will force the workers to work in a particular way. Money is not the main motivator for employees. However, it does satisfy basic needs. Back to Maslow again, the hierarchy of needs. Employees also need recognition, praise, and they need to take on responsibility. So when we look at the incentives that are offered to employees to become more productive and more engaged in their work, it's important to try to figure out what the balance should be. And the balance sometimes may be financial, maybe offering some sort of bonus scheme or some sort of reward scheme. It may also be job enrichment or job enlargement. It may be recognition. It may simply be a letter every month that goes out to say this is the employee of the month and this is why this person's the employee of the month. And that may lead to competition between the workers, which may not be good, or it may be good. But there's a constant drive on the part of management to try and find what the secret is. What is the best way of motivating the workforce? And it'll vary according to the personalities involved, and it'll vary according to the type of organisation it is and the product it deals in. So that's all we're going to deal with in this class. So let's leave it at that and say thank you for watching.